IRMAA is income-related monthly adjustment amount. And so what a lot of folks don't realize is that there are some base costs when it comes to Medicare. But if your income is at certain levels, and say you bring in a certain amount of income that's higher than others, you can actually pay more for the same health insurance benefits that somebody else is getting, but because of your income, you get to pay a little bit more. It almost feels a little bit like this part of Medicare is a means-tested part of the government system, and they say we have no means testing in our government, but this one really feels like that. And so explain what IRMAA is and how it can potentially impact some of these Medicare costs.
Yeah, so IRMAA is an additional charge into your base premium, and then the more money you make, and it's also if you are single or married filing jointly, there are different thresholds that you meet, and there are several different categories that you would go into. And when you file for Medicare, they're going to look at your income from 2 years prior. So whatever you were making then is going to kind of determine what your Medicare premiums are going to be. But there's also different things that you can do to change that as you go forward and you're reducing your hours and your income. But basically, it's the higher you earn in your wages, the more you're going to pay for your Medicare benefits, both on the Part B side and the Part D side.
So the Part B right now is around $174, I think, right?
$174.70.
$174.70 is the base, and it can go up as high as like up in the 700s. Or what's the highest?
It could add about another $560 some a month.
In addition, over and above the 174. So there's people out there that could be paying $500 plus more per month per person if you're married, right? Think about that. So if you're a married couple and you get into some of these higher brackets, that could be an additional over $12,000 per year that you get to pay for the Medicare benefits that somebody else is paying significantly less for. So understanding IRMAA may be one of the most important facets as you prepare for retirement, and then even if you get into retirement. What's interesting is when people do retire, Frankie, usually they're at like the highest earning that they've ever been at, right? When people retire, one of the hardest things for people to do when they retire is to walk away from work because they're making the most money that they've really ever made in their entire life. For most people, for a lot of folks. So a lot of people are in what would be considered one of these IRMAA brackets going into Medicare. So Medicare is going to look back 2 years, see their income was way up here.
Right.
And even though in retirement their income might be considerably less, which for most people it is going to be considerably less, are there things they can do to get an adjustment down to a more reasonable level based on what their future income might be?
Yeah, there's a waiver request that can be filled out and you send in with your taxes and based on a bunch of different circumstances of how your new income is going to be reflected. And if it's much lower, we send that into the Social Security office and then they review that and then you get a determination letter that tell you if it's been reduced or not.
And a lot of times that's important because not to confuse things, but when someone signs up for Medicare the first time, they hold that premium for 2 years, is that correct? Or is it adjustable every year when you turn 65?
It's adjustable every year when you turn 65. You just have to prove in the documents of what your income is going to be, and they'll go through because they're going to get the tax records going forward every year.
So if you do find yourself in one of these IRMAA brackets, it is changeable. It's not like we're stuck there forever. But there is a way for you to even get that adjusted down, especially if you're going to retire. What's interesting about IRMAA is what types of things they count against you, right? It's not just earnings from employment. Break down real quick, what all do they count against you when they factor in this IRMAA?
So they're going to count all interest income. They're going to count any withdrawals from RMDs. You do Roth conversions. You sell a business. All of that investment income gets added to your modified adjusted gross income. And so anything that number comes out to be is what's going to be determining what your Medicare premiums are going to be.
So basically everything.
Everything.
Dividends, interest, capital gains, you sell a rental property, you sell some stock, you take an IRA withdrawal. They even count against you tax-free municipal bond interest, right? I mean, if you have tax-free municipal bond interest, it's tax-free, so I'm not paying taxes on it. However, that still does count against your Medicare IRMAA. The only thing, I believe there is one thing that doesn't count against Medicare IRMAA, and that would be what?
VA disability benefit.
VA disability benefits. So essentially, this is one we really need to pay attention to. If you wait until retirement and to figure out what IRMAA is, there's a good chance that you're going to be penalized and paying more for Medicare, or even in your retirement years. Certain decisions that you make could have significant negative consequences against you. So you're just out there enjoying retirement, spending some of the money that you've worked hard for, and then all of a sudden 2 years later you get a letter in the mail that you get to pay more for your Medicare, and you didn't even know it. So those are not pleasant letters to get. You can avoid them, or at least prepare yourself for them well in advance. If you'd like to meet or talk with Frankie about any Medicare questions or your Medicare options, if you need help planning for Medicare coming up, you can give us a call. We'll give you a free consultation, 615-488-3039. Thanks for watching today. Don't forget to like and subscribe for more valuable insights regarding retirement planning just like this.